Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, what's going on in the markets today? Actually, I don't know. I had to record this last night. Had some early appointments today. All I want to say about the markets is I think they're going to manipulate them higher. We're in the middle of earnings seasons. The earnings are going to come out better than expected. The market's going to be pushed higher. I do think the crash is coming. I think it's been postponed till next year, probably the first quarter of next year. But towards the end of the year, I do think they're going to push this market up higher. That's just my take. Yours may be completely opposite. A lot of people still think the market's going to crash this year. It is possible. I wouldn't take that off the table. If we can get below that 200-day moving average and stay there for a day or two, then the downside's big in this. There's not much support holding it up after we break through that level. But right now, that level's support, and we got to get through there, hold there for 2 or 3 days, and then we'll probably get a bounce back up, and then the crash could happen. But I think towards the end of the year, they're going to push this market up higher. That's just my take. All right, so today I want to talk about the banking system, which relates to the real estate system, but I want to start with the banking system. Okay, so the banks come out, well, this new ban on financial institutions from hoarding personal data, your personal data. There's a ban on it. It's the Consumer Financial Protection Bureau. Consumer Financial Protection Bureau. They put a ban on financial institutions from hoarding your personal data. Now, what they're marketing this is, you can't make this up, what they're marketing it is an easy way for you to switch banks. Now, I've switched banks a lot of times in my life, usually because one bank pisses me off, I switch to the other one. It's really not that hard. But this new ban on financial institutions from hoarding your personal data came out. Now, personally, I think this is a way that the government will be able to track you easier. See, the government wants to track you. I think this is a way to get your personal data right into the CBDC, the central bank digital currency that they want to come out. But they're marketing this as a way to protect you so that you can switch from one bank to the other bank a lot easier. Now, there's way too many of these governmental agencies that are out there, and they all have to justify a reason for their existence, and the reason for their existence is to make bank switching easier for you, right? Now, maybe they want your personal data so they can transfer it to the IRS easier. I'm really not sure, but let me tell you, I don't feel a lot safer with this new thing in place. I don't get it. I don't understand it, but that's the latest from the banks. Okay, now the banks are shedding employees. They're just getting rid of them. The top 5 U.S. banks have already gotten rid of 20,000 employees this year. Now, I keep talking about how all the branches they're closing to me. So I had to drive farther, and I go to the ATM. The ATM's out of money. I don't get what's going on with the banks right now, but it's really not that good. I mean, just this year, Citibank has laid off 7,000 employees. In the third quarter, Wells Fargo has laid off 6,000. Bank of America laid off 3,000. That's just in the third quarter. They're laying off all the people. They're closing all the branches. The ATMs are running out of money on a regular basis, way too regular for me. Now, I understand that people, they're withdrawing their money, right? Because they want to pay for those luxuries. Things like food. Things like rent, luxuries. That's what people are taking their money out of the banks. But here's the thing. The banks are not making loans right now. A lot of people are rejected for loans right now. A lot of people are rejected for a home equity line of credit. Well, number one, they're already underwater, but the bank's saying, no, you owe too much money already. You have too much debt. They're getting rejected. They're getting rejected for car loans. Car loans, you used to walk in if you were breathing. You could get a car loan. They're getting rejected. They're getting rejected for credit cards. They're saying, no mas, no mas. Look at, you have too much debt. You have too much debt, and they're rejecting you. So the banks aren't really making any any loans right now. They're really pulling in the reins, and they're raising the rates on the one they're making. Look at the credit cards. You're up above 20, 22, 24, 26% on your credit cards. Just look at your statement if that's your interest rates they're paying now. That's ridiculous, right? But they're starting to be this, well, it's kind of like a credit crunch, right? A liquidity crisis. They're not making loans. People cannot get money. People are having a hard time of figuring out how to get money, and the banks don't have it. So this kind of contracts the money supply now, which is interesting because the last time the money supply contracted would have to be back during the Great Depression. Now, could we be coming into another Great Depression? I think yes, we can. Our money supply is contracting. There is a liquidity crisis. There is a big problem that we haven't seen since the Great Depression. That's what I want to talk about. Banks makes me very nervous. Be careful what you have in there. Make sure that's fully protected. And I don't know, it just makes me nervous. Anyways, all right, let's get over to the real estate market now. I want to start with the funny story here. A funny story. All right. It's called the Katy Perry Act. Now, this is classic, right? Now, as a real estate broker, I understand what's going on here. So she bought this mansion, right? She bought this mansion, $15 million, right? And she bought it from this guy named Carl Westcott. Carl Westcott, 84 years old, and he bought this mansion for $13 million. Excuse me, he bought it for $12 million, and 2 months after he bought it, he sold it to Katy Perry for $15 million, makes $3 million, right? But he's claiming he's a victim. He wants out of the deal. He's calling this elder abuse. And now we got the Katy Perry Act coming into play. Katy Perry Act, you know? The singer. I mean, you can't make this stuff up. But here's the thing. What the act does is it gives old people, a right of rescission. Like they can go in and negotiate a contract, negotiate the deal, and then they can rescind it if they change their mind. Look, at real estate, once you sign on the dotted line, there's no cooling off period. Like in automobiles, you have a cooling off period. You can return the car the next day. But in real estate, there's no cooling off period. You sign on the dotted line, that's a done deal. But anyways, Mr. Westcott, Carl Westcott, 84 years old, claiming elder abuse. They're starting the Katy Perry Act to protect these old people from making $3 million. Doesn't make any sense to me whatsoever. But that's just, I mean, you really can't make that up. It's kind of funny though, right? Okay, all right. So what's going on in like the foreclosure market? Foreclosure market. Now the house foreclosures are spiking, right? 100,000 a quarter. Why? Because they're underwater and people don't want to pay when they're underwater. So they let their house go to foreclosure. They stop paying and then the banks come and foreclose. And that's spiking, right? Up 34% year over year. Okay, that seems like a lot, but it's only 100,000 homes a quarter. So about 400,000 homes a year are in foreclosure, going into foreclosure right now. And it's going to become millions. So 400,000 really is not that bad. But that's what's going on there. But now we have a bigger problem, which is foreclosures on the commercial side of things. Now I want to talk about this a little bit. Apartments. Apartments are being built at a record pace, right? Right now there's over 1 million apartment units either in the process of being built or started up, and they're just coming onto the market. A lot of new inventory. Now, what's this doing to rent? Well, it's putting pressure on the rent because, you know, if you're living in that old apartment, oh, that new one looks better and it's the same price. Oh, maybe it's even a little cheaper. Well, I'm going to move. And now you got the vacancy over here. So that landlord now lowering his price, trying to compete against the new ones out there. So everybody's starting to lower their prices. And across the nation, rents are starting to go down for the first time. Now, of course, not in your area. Your area only goes up. Rents are going to continue to go up forever. You got the moon boys in your, I know you got the moon boys, but what's happening to these rents is they're going down. Some people, they can't afford to pay the rent because inflation's going up, and they don't have enough money for rent. You see, they have to choose. They choose between, well, paying for food or paying for rent. And most people like to eat over having a roof over their head. So there's a lot of people out there hurting right now. I mean, well, basically 65% of people are living paycheck to paycheck. So a lot of rents are not getting paid. As people start to get laid off, these rents are not going to get paid in like millions and millions of them. But there's this building. It fascinates me. It's in San Francisco, right? 37 floors high, about 800 units. You know, these are top end luxury sort of units, right? Anyway, so this building, well, in 2019, this building was worth about $550 million, $550 million in 2019, right before the pandemic. Then during the pandemic, people stopped paying their rent because Governor Newsom, hey, you don't have to pay your rent anymore. And a lot of people just got out of the city. They don't want to live in that dump of San Francisco anymore. San Francisco's gone downhill. But okay, so $550 million back in 2019. Well, move forward to today, it's in foreclosure, right? It's in foreclosure. See, these don't have 30-year mortgages at 2.8%. This is commercial property, and they refinance every 3 to 5 years, right? So they got to come up with and refinance the building. Well, when they went to the bank to refinance the building, the bank said, well, we can't refinance the building. You know, we just can't. They already owe $400 million on this thing. $400 million they wanted to refinance, but the bank said, well, nobody's paying the rent. So this thing's not worth $400 million. So they foreclosed upon it. You know what that's for sale right now? For sale for $270. Okay, $270 million. It was $550. Now it's $270. That's half off. This is what I'm talking about. Yeah, this is just apartments. This is a commercial building, but this is what's going to be coming to your house. Your house is going to be down 50%, just like this building. So, all right, so they owe $400 million on it. These are approximate numbers. They're asking $270 for it. Well, somebody's going to take $130 million loss. The landlord, they already took a loss. You know, they bought, let's call it $500 million. They owe $400 million. They don't care. They just walked away from the $100 million. The $400 million is the bank. Might not be a bank, could be an insurance company, could be your pension fund, but that bank's got it at $400 and they're trying to off it for $270. So they're going to lose $130 million. Okay, and this is the spiral that the banks have right now. Commercial is going to bring the whole system down. Your house may be the last thing we have to worry about if the banking system goes down, because they're talking, first of all, the banks don't have your money. They borrow, you deposit the money in there, they give it out in the loans to these commercial buildings. Commercial is now half off. They've lost half your money, or they put it in bonds. Bonds are half off. They've lost half your money. FDIC doesn't have your money. We get a bank run, and there will be bank runs on your bank. Your bank's going to go under, and it's going to just take you some time to get your money out, right? Okay, so be careful what you have in the banks. I keep stating that, and I don't think I can state that strongly enough. But the commercial properties are crashing right now, and that's apartment buildings. Office buildings are even worse. But these apartment buildings, think about the syndicators. The syndicators are going to be fine. The people like the Grant Cardone, the BlackRock, they're all built in with their contracts, but the people that put money into them, they're not going to get their money out because these things are already half off. They lost half the money of the syndication. The banks lost half the money you got on deposit. There's really not that many safe places to have your money right now. Well, Tall Mike, he likes gold and silver. A lot of people on here say that Bitcoin's the way to go. I don't think so, but maybe. Take your chances there. Take your shot on Bitcoin. I'll take my shot on gold. We'll see how that plays out over time. But the dollar is going to get destroyed because they got to print money to bail these banks out, right? And we're talking about 17 trillion. Just add 17 trillion to bail out the banking system on top of the 33 trillion we already own. We're over 50 trillion. We will hyperinflate. The dollar, as you know, it will go away. Now, of course, they're going to replace that with the central bank digital currency, and that's fine. That's fine. You know, you're going to have your phone. You're going to pay with everything, and it's going to be connected right to the Fed. They're going to get to track you. If you're a bad person, they're going to shut your payment off. Let's say they don't want you to travel outside of a 30-mile radius of your house. Your money's only good within 30 miles. This is scary stuff. This is futuristic stuff that they warned us about. George Orwell's 1984. It's even scarier than that. I mean, it's scary out there. You got, what they're trying to pull off. If it doesn't scare you, it scares me. I hope there's a revolt against it. I hope people say no central bank digital currency, but people won't even know when they bring it in. They're going to make it sound just like a credit card. Hey, we'll put $1,000 on your credit card if you switch all your money over to the central bank digital currency, and everybody's going to jump in and do it because they're going to say, please save me, government, because things are getting hard. Life is hard already, but then they're throwing 20% inflation. It's going to get really tough for a lot of people. Look, a lot of people out there, they need help. It's not like the Instagram pictures that they post up there on Instagram. That's phony stuff. I know a lot of these people. A lot of these people that go to all the football games, they take all the trips for a week or two, go to Fiji or go to Tahiti, and they post the big smiles. The Instagram ones. A lot of these people, they're so far in debt, they don't know how to get out of it. They're hurting. So there's a lot of people that are going to be hurting right now. And it's going to be some tough times for a lot of people. Look, I donate a lot to food banks. I believe in food banks. My grandfather, he always taught me, he was a farmer during the Great Depression. When someone come to his farm asking for food, he would feed anybody. Everybody's got to eat, and that's why I donate to food banks. Convoy of Hope would be a good one if you're looking for a place to donate to. But it's hard times for a lot of people, and it's going to get much worse. These are the good times right now, unfortunately. What I see coming is going to be ugly. It's going to be real ugly. Anyways, I hope I didn't depress anyone. I'm not even here today. This is just artificial Mike. Anyways, I will be here again on Friday to talk to you. Hit that subscribe button. Give me the thumbs up for today. Why not? Why not? Get out to everybody. Enjoy the day. Bye-bye now.